Can you make passive income? You're probably tired of the endless 9-to-5 grind, living paycheck to paycheck, and looking for a way how to make your hard-earned money work for you. I'll unveil the secret to generating passive income with a single investment, the S&P 500. And trust me, this is not some video where I'm going to sell you $100,000 per week with one app no one ever heard of. Money, sound, explosion! No, I'll show you that the S&P 500 is the real deal, and I will provide everything with the historical data that you can trust my words. And if you still don't believe me, you can check yourself. I'll leave the sources in the description. So stick around till the end, because I'll show you how to getting started in just 3 steps. What is the S&P 500? The S&P 500 consists of the 500 leading US companies. This provides you with a huge diversification. Diversification means to spread your risk by putting your hard-earned money into different companies and sectors. This diversification reduces risk to lose money and increases the potential for steady, long-term returns. Passive income doesn't have to be complicated. That's the beauty of this strategy. No complex trading strategies or sleepless nights. With the S&P 500, you can invest in a diversified portfolio of leading companies with a single click. Let the experts of those huge companies do the heavy lifting while you sit back and watch your passive income grow. Let's dive into the historical numbers of the S&P 500. By analyzing the S&P 500 past performance, you will get an understanding why this investment is working. The S&P 500 has consistently delivered an average annual return of 10% over several decades. With all bull markets and bear markets and Black Monday and COVID crash, the S&P 500 has proven its reliability. Now we learned that the S&P is growing 10% per year, but how does the 10% average annual return translate into passive income? Let's break it down. Imagine you invested $120,000 in the S&P 500 today. With an average return of 10%, in just 1 year, your investment growth by $12,000 divided by 12 months would mean your investment has grown $1,000 per month for just putting your faith into the US stock market. But here's the magic. As time goes by, your returns compound, leading to even a greater passive income potential. You can use this interest to reinvest it so it'll grow even quicker the longer you have been invested, with thanks to the compound interest. Here's an example. If we let the compound interest work, we can see that the $120,000 in 20 years will grow to $807,000 with just leaving your investment in the S&P 500. Now that you're convinced about the wonders of the S&P 500, ready to take control of your financial future? Step 1. Open an investment account with a reputable brokerage firm that offers commission-free trading. If you live in Canada, use my QuestChat link I'll leave in the description. Step 2. Choose an S&P 500 ETF that has a low expense ratio like Vanguard's VOO with an expense ratio of 0.03%, or the SPY with the same expense ratio of 0.03%. By investing a fixed amount consistently, you'll take advantage of the dollar cost averaging. Means buying more shares when prices are low and fewer when prices are high. Keep a keen eye on your investment's performance while enjoying the freedom of passive income. And there you have it, club, your ticket to making passive income with one simple investment. So, are you ready to make your money work for you? Start your journey towards passive income. If you want to know more about index funds, check this video next.